Please settle down, friends. Please settle down there. Good afternoon, ladies and gentlemen. Welcome to this press conference. Today's press conference, among other things, is to give you some highlights of the various initiatives to improve the performance of banking and insurance sectors. We are privileged and honored to have amidst us the Honorable Minister for Finance, Corporate Affairs and Information and Broadcasting, Shri Arun Jaitley ji, who will address you on the subject. I extend a warm welcome to you, sir. I also extend a warm welcome to Honorable Minister of State for Finance, Shri Jayant Sinha ji, and Dr. Hasmukh Adhia, Finance Services Secretary, Chief Economic Advisor, Shri Arvind Subramanian. Friends, first, the Honorable Finance Minister will make his opening remarks. Thereafter, there will be a brief presentation on the subject. Then the forum is open for questions and answers. I'm sure all of you are familiar with the points of order. Kindly stick to it. And those who would like to ask questions, kindly raise the numbered placards that are in front of you. May I now request the Honorable Finance Minister to make his opening remarks.
Well, thank you very much for all being here. I think this is more about the presentation and the details being given out in the presentation to you, which the Secretary of the Financial Services will make. Some of the facts in the presentation have already come out, and there will be some additional facts which will come out. The real purpose is to collate all these facts so that we can have a clear idea about where we stand as far as the banking system is concerned. And this is really in relation to the public sector banks, which along with the other banking institutions in India play a very important role in the economy of this country. They are the lifeline as far as the economic activity is concerned. In the last few years, I may say, they faced a challenging situation. It was partly on account of the slowdown in some sectors, and their problems could also be related to those sectors itself. The government has been from time to time reviewing the health of these banking institutions. Even though challenging situation did exist, there is no cause for panic at all. The either cause for panic or for alarm doesn't exist. The nature of the problem is such that with some initiatives which we've taken, it has partly been fixed and is capable of being fixed. It's true that for some time it went unattended. Now, ever since the present government took over, our policy was that commercial decisions must be really taken on commercial considerations. And the level of political interference in the functioning of the banks has to be minimized. The detailed presentation made by the chairpersons of various banks and by the banking industry as a whole, and this is a view shared by all, including the central bank, including the government, that it was sectors such as steel, power, highways, discoms, to a lesser extent sugar, which were predominantly responsible for this stress. And therefore, to resolve this whole issue and find a solution to this, you need to deal with banks as an institution, you also need to deal with each of these sectors. There is a positive movement as far as the highway sector is concerned. And the large amount of public investment going into that sector has got the sector moving. And therefore that is now being reflected in the erstwhile stressed assets as far as the highway sector was concerned. We have in the last few months taken some steps with regard to the steel sector. But the problems with regard to the steel sector are really on account of external factors. And therefore the stress, the steps being taken also relate to that. For sugar, one package has been announced to help the sugar mills to get out of distress. The Prime Minister has recently had another meeting. There is still important work in progress as far as that sector is concerned. We are continuously monitoring the situation as far as private sector power companies are concerned, as also the discoms. And some states have to have some urgent reform measures as far as their discoms are concerned. We are independently trying to convince each of those states that unless they take corrective actions, the banking system would be unable to support them indefinitely if they continue to lose resources month after month. We will also be today explaining to you a new policy where each bank would be monitored now on basis of key performance indicators. In the presentation to be made to you, a detailed explanation will be given. As a first step towards a banking investment company, which will hold all the assets of the banks, the shareholding assets of the governments in the banks, we had proposed a bank board bureau, and its structure is also going to be announced today. Some important announcements with regard to key personnel are also going to be made. And before the Secretary did that, I think my colleague, the Minister of State, Shri Jayant Sinha, who has been actively involved in this whole process, will make a brief comment.
Thank you very much, Honorable Finance Minister. And I would like to recognize all my colleagues on the dais as well, friends from the media. As the Honorable Finance Minister has said, we have been working on coming up with a comprehensive framework for the transformation of our public sector banks for several months now. Many announcements have already been made. For example, the capital allocation numbers that were announced in Parliament. Many other announcements are still pending, some of which we'll be making today. But we felt that it was very important at this stage, given how important the public sector banks are to India's financial system. Effectively, they're the core of India's financial system, represent 70% of the assets in our banking system. They are the dominant financiers for the building out of our infrastructure, and they have played such an outstanding role as far as financial inclusion is concerned, particularly with respect to the Jan Dhan Yojana, that it was very important for us to be able to put the resources and the support in in the hands of these public sector banks so that they are competitively positioned and they're ready for the future. So we have been, as a result of that, participating in a very thorough and consultative process for the last 6 months, even longer in fact, since we started this ahead of Gyan Sangam. Gyan Sangam, of course, as you might remember, in Pune was in January. And thereafter, we have, of course, worked in detail with each of the banks. We've reviewed their strategies, their capital requirement plans. We've consulted with a wide set of stakeholders, including experts from the equity markets, management consultants, economists, and we have, of course, spent a lot of time doing the analysis and trying to understand what is the best way to put together this comprehensive framework. As the Honorable Finance Minister just said, a number of elements associated with this comprehensive framework have already been placed in the public domain. But what we wanted to do today was to actually assemble all of them in one package so that you can see how all the different policy levers that we are working with are put together. And that, I think, is quite comprehensive and also should reassure everyone in terms of how robust and effective this approach is going to be. The other very important aspect of the plan that we put together is that it is a bottoms-up transformation process. By making sure that our banks have world-class governance and the operating autonomy that the Honorable Finance Minister spoke about, we think that we are going to initiate a bottoms-up transformation process that will be led and driven by the banks and their boards themselves. So this is not something where the government is dictating from a top-down perspective what the bank should do. This is with the banks operating in their own commercial logic, applying principles of strategic logic and strategic positioning to figure out how they themselves can prepare themselves for the future. So that is what we have attempted to do with this plan. What we believe is the case is that this represents collectively perhaps the most comprehensive set of changes that have been undertaken for these public sector banks since they were nationalized in 1969-1970. So we think that this is a very, very important step forward for our public sector banks, and we trust as a result of that they are going to be very well positioned for the future. Thank you.
Thank you, sir. Now I request the Secretary to make a presentation.
Thank you, sir. Honorable Finance Minister, Honorable Minister of State, my colleagues, and the media people. Sir, the comprehensive transformation framework which we are going to present today has got 7 elements, and fortunately it all starts with A, B, C, D, E, F, G. So we have tried to put it in 7 steps like that: A, B, C, D, E. A stands for appointments, B stands for bank board bureaus, C for capitalization, D for distressing the entire gamut of activity with respect to the stained assets of public sector banks. E stands for empowerment, what have we done to empower our banks or what we are going to do to empower them. And framework of accountability, which Honorable Finance Minister talked about, the new system of making them accountable for certain key performance indicators. And finally, of course, the remaining governance reforms about which we will be talking. Now, sir, in each one of them, we need to tell you what we have done so far and what we need to do further in each one of that, and how we are planning to go in each one of that. Sir, talking of appointment, it has taken us some time to appoint good people because we wanted to go in for participation of private sector people also. And first of all, of course, we had announced that there will be a separate post of non-executive chairman and MD. Having done that, we started the search for both non-executive chairman as well as MD. And the entire process of recruitment or entire process of selection of MD was made very, very transparent. There was a 3-stage process, and all the candidates were asked to go through 3 different panels of interview, at the end of which only they were assessed. Finally, the proposals were sent to the appointment committee of cabinet, and we are very happy to announce that we have appointed 5 key personnels, the MD and CEO, in Bank of Baroda today, Bank of India, Canara Bank, IDBI Bank, and Punjab National Bank. What we'll be doing is that we would be giving you a biodata of each one of them in the press folder that we are going to give you at the end of it. So you will have a complete biodata of these people. Now, what is significant here is that out of these 5 candidates, 2 are from the private sector. And so the wait for a longer period has been worth it. We have been able to spot 2 very good candidates from private sector also in this appointment. And that one person is Mr. Jay Kumar of Bank of Baroda, who is now MD and CEO of VBHC, Value Homes Private Limited. He is an ex-Citibank person. And then second person is Mr. Rakesh Sharma, who is going to Canara Bank. He is MD and CEO of the Lakshmi Vilas Bank Limited. So that's been the announcement today, the major announcement, that all these CEOs will take over as early as possible. Their appointments have been announced. Coming to the second part, the non-executive chairman also, we had done the search committee chaired by Governor RBI, and all of us were there. Finally, we have been able to at least announce the first 5 names of people who are being made the non-executive chairman on the board of Bank of Baroda, Bank of India, Canara Bank, Vijaya Bank, and Indian Bank. Now, these are the non-executive chairmen. They will function as non-official director also, and they will chair the board meeting of all these public sector banks. And these are also very eminent people. We have given you the biodata of all these people in your press briefs, so I won't elaborate upon it. For example, in Bank of Baroda, we have put Mr. Ravi Venkatesan. He's an independent director on the board of Infosys and a very renowned name. I'm told he's just 51 years old, but a very eminent person in his own right, and rest of the people also are mentioned here. So now what remains to be done? Let me also tell you that there are some vacancies as non-official directors, some vacancies of non-official directors on the boards of banks, and we would be filling them up in the next 3 months. It's a targeted, it is a target we have fixed for ourselves. Then there are 6 other non-executive chairmen which are to be filled up. That also we would be doing in the next 3 months. But at least we have made a beginning. When we announced that there will be a separate chairman and MD, there were a lot of apprehensions as to whether government is going to put IAS officers only there, or whether government is going to put political people there. But the first set of announcement which we are making today makes it very, very clear that we are looking for professionals only to be the non-executive chairman of banks, public sector banks. Coming to the Bank Board Bureau, we have finally been able to freeze the constitution of the Bank Board Bureau. This was one of the items announced in the budget by Honorable Finance Minister. And the structure will be that there will be a chairman who will be either a retired banker or a retired regulator or a business person or an administrator with knowledge of financial sector. He could be from any sector. There will be 6 other members apart from chairman. 3 will be from the government and 3 will be private professionals. Among the 3 government nominees, 1 will be Secretary DFS, 1 will be Deputy Governor of Reserve Bank of India as nominated by Governor, and 1 will be Secretary of Department of Public Sector Enterprise. Out of the 3 remaining experts, 2 will be the banking experts and 1 will be expert in any other field. He could be a management expert or a legal expert or any other expert. And the selection of the members of the Bank Board Bureau would be done by a committee again chaired by Governor RBI, and as per the SEC procedure, they would be selected. We hope to now select the members of the BBB and the chairman also, and the entire process would be finished well in time before 1st of April 2016, because that is when we want the Bank Board Bureau to start functioning. What will be the functions of Bank Board Bureau? Primarily, it will have 2 functions. One is the BBB will replace the existing appointments board, which functions as a search committee for full-time managing directors and full-time directors of public sector bank. And it also will be functioning as a search committee for the non-executive chairman of public sector bank. Apart from that, the Bank Board Bureau will be like a link between the government and the banks. And the Bureau will be constantly engaging themselves with the chairman and managing director of various boards to evolve the various strategies for them. and to sort of have consultation with various banks as to how they could evolve their strategies and work together. So that will be the second function of Bank Board Bureau, advisory services on strategies of banks. So one is the appointment function, the search committee function, the Bank Board Bureau will do, and the second will be the advisory services. Next, coming to the capitalization, we already announced earlier, as Honorable Finance Minister had kindly agreed to give a larger sum in the supplementary demand. Apart from 8,000 crore approximately, which we had in the budget this year, 12,000 crore has already been provided in the first supplementary. 5,000 crore, Honorable FM has agreed to provide in the next supplementary. So this year we will be giving 25,000 crore of capital to banks. And our estimate for capital, as we had earlier said, was that even if we have to have a safe buffer over the Basel III norms, and presuming that there will be a credit growth rate of 12% this year and 1% increasing every year in the next 3 years, then also the requirement of capital for public sector bank would be approximately 1,80,000 crore, out of which 70,000 crore promise Honorable FM has already made. This year we'll be giving 25,000 crore, next year 25,000 crore, and the subsequent 2 years 10,000 crore each. The remaining part of the capital, we hope that with this kind of revamping happening of public sector banks and this kind of a consolidated plan being made for them, they would be easily able to raise this from the market. We had done some rough calculation even 10 days ago when the banks' PSB stocks were not so high, that even at that valuation, they would have been able to collect at least 80,000 crore from the market by reducing the government's stake to 52%. But now with all these efforts being made and all of this capital, we don't need it tomorrow. Over the period of next 1 or 2 years, as and when they require the capital, now they will be enabled to go to the market and they will be able to easily fetch the remaining capital that they need for their survival and even for their growth. Now, as we had announced, there are 3 tranches to the capital to be given this year: tranche 1, tranche 2, tranche 3. Tranche 1, the 40% amount, that is about 10,000 crore, was to be given, as we had announced, to those banks where we wanted them to have at least minimum common equity of 7.5% by FY 2016. The second tranche was to be given to 6 large banks, including SBI plus 5 other large banks, where they need more capital in order to meet with the credit requirement of the economy. And that's why we wanted to make them stronger. And tranche 3, 20%, that is 5,000 crore, is to be given to those banks who meet with certain performance indicators up to December 2015. And they would be given this last tranche only in the month of March. Today, we have done the calculations for the first and the second tranche, and the total of 20,000 crore, total amount of 20,000 crore is being released to banks as like this. The State Bank of India is getting 5,531, Bank of India 2,455, IDBI Bank 2,229, Bank of Baroda 1,786 crore, Punjab National Bank 1,732 crore, Canara Bank 947, Indian Overseas Bank 2,009 crore, United Bank of India 1,080 crore, Corporation Bank 857 crore, Andhra Bank 378 crore, Bank of Maharashtra 394 crore, Allahabad Bank 283 crore, and Dena Bank 407 crore. So total of 20,000 crores allocation bank-wise has already been worked out, and it is being released very soon. So this is what we just wanted to tell you. Now what is yet to be done is the allocation for the remaining 5,000 crore, which will come in the last quarter of this year after we see the result of all the banks in the first 9 months, how they have done vis-a-vis our KPI, key performance indicators. But there we would take care to see to it that the remaining 8 banks, which are already adequately capitalized, and that's why they did not get any capital in this tranche, those remaining 8 banks which are otherwise adequately capitalized, but they did not get it under tranche 1 or tranche 2, they would also be accommodated under the performance grant, subject to certain indicators of performance being met with by them. And second thing which is yet to be done is that the banks then will have to raise adequate capital from the market as and when required. There is no urgency, there is no emergency. All banks, as FM has rightly said, are adequately capitalized. But still, this is only a future provision that we have made, that as and when they need, they can also go to the market and raise capital. Coming to the third part, D part, distressing the assets of the banks, the bad assets of the bank. One question comes to our mind, that is the situation so bad? The answer is no, the situation is not so bad. Here is a historical graph of gross NPA of public sector banks in the last so many years, 2001 to 2001 to 14-15. Now, as you can see, there was a time in 2001 when the regulator, the RBI, was not very strict with the provisioning norms, with the gross NPA calculation, the method of calculation of gross NPA. That time also, the gross NPA of public sector bank had gone up to 13%. And now we are at 6% end of June quarter. Of course, this is only gross NPA. In 2001, there was no concept. It was only NPA. There was no concept of restructured assets, what we call stained assets. Now, what RBI has done is that it has brought in more rigorous prudential norms. What RBI is saying is that if a project is restructured for some reason, if the term of the loan is extended, or if an extra capital is given to the same project, it will be considered as restructured, and there will have to be a provisioning for that also. Now, that restructured block of assets is about 8% now in case of public sector bank. So we have today the total stressed assets, what we call is 8% of standard restructured assets, as we call them, and 6% of gross NPA, so total of about 14%. Now, we have to just keep it in mind, but all the restructured assets are not gross NPA. Please remember, they have been restructured because of certain historical legacy factors such as delay in land acquisition, not getting fuel because of cancellation of coal mines, or for whatever reasons. They have been given the extension of time, and that's why they are called restructured. So we don't need to worry too much about that. Coming to what we have done so far about the stressed assets, Honorable Finance Minister, after the meeting of the MDs of the public sector banks recently, on June 12th, in a media interaction, he had told us that we would be setting up a cell in the Department of Financial Services to specially monitor each and every project which is stressed. We have done it as per his instruction, and a lot of review meetings have taken place on sectors as well as on individual projects. There have been meetings at the level of Principal Secretary to Prime Minister. There have been meetings at the level of Honorable Finance Minister. There have been meetings at the level of Honorable Power Minister, and a lot of other meetings have taken place at my level also. And we have been able to pinpoint what are the pain points of all these test projects and what each ministry needs to do in respect of helping them, and what the promoters have to do, what the banks have to do, and what does the regulator need to also do. So we have sort of pinpointed those specific measures, and we have written to the concerned ministries, and we are following it up with that. And some of the actions which you have seen recently have come out of this kind of measures. Now, what is proposed in the next slide is that we would be continuously monitoring these projects. The ministry will also take whatever policy actions are required to be taken in respect of that particular sector. We are also starting a process of dialogue with DISCOMs. And Minister of Power, Mr. Piyush Goyal, has held 2 meetings on DISCOM, one with Rajasthan Chief Minister, one with Haryana Chief Minister. And we have been able to get some idea on how we can sort out the problem of DISCOM. And incidentally, I may tell you that all this DISCOM problem or those are not actually NPAs. These are all standard assets, but they can be converted into NPA if we do not take a real-time action on it. But otherwise, as of now, they are standard assets. As far as gross NPA is concerned, if I may tell you, the total gross NPA of infrastructure sector or public sector bank, as of now, is 32,000 crore only. but the remaining are standard restructured assets. And out of that, energy as of now is only 13,000 crore, transport is 10,000 crore, telecommunication is 3,000 crore, and etc. Iron and steel is the largest sector in the NPA of public sector bank, which has got 31,000 crore of NPA. But that also is because of global factors, as Minister has pointed out. Recently, there was a decision taken to increase the import duty on the steel, and that is going to probably help the steel sector. Textile also has got 20,000 crore of NPA. Chemical about 10,000 crore. Gem and jewelry about 6,700 crore. Construction sector has got only NPA of 4,800 crore, and the remaining are all miscellaneous sectors of economy. So that is the picture as far as the gross NPA is concerned. So we are trying to take whatever actions are required to be taken. We are monitoring not only the sectoral progress, but also the project by project progress in our department. What we need to do for the future is that there has been in the past too much of emphasis only on lending by the public sector banks when it comes to infrastructure. We need to develop a vibrant corporate debt market by which the corporates would be able to raise debt from the market and they can use it for having their infrastructure projects. The second thing we need to do is to strengthen the existing ARCs so that they would be able to take some of the stress assets of the banks, and the banks can clean up their balance sheets by passing it down to the ARCs. And ARCs can make concerted efforts to recover this money from the stressed assets. Next. On the issue of empowerment, in the Gyan Sangam, Honorable Prime Minister had announced that we would not like to have any interference in the normal decision-making process of the banks, which have to be on the commercial lines. And I'm very happy to say that we have stuck to that promise completely. You are free to ask any bank whether there has been a single instance in which anybody from the ministry or anybody from the government has told them what to do, what not to do as far as lending is concerned or as far as settlement of cases is concerned. Not even a single case. Not even a single case. Not only that, the Prime Minister's promise of not interfering in the day-to-day operations and not in the commercial decisions of the bank was immediately followed by a letter which was sent by us in writing that there will be absolutely no interference. And we have stuck to it, and you are free to point out exceptions if there are any. There will be none. In fact, so many people in the beginning used to come to us and request that please get us this help from bank, OTS kara do, ye kara do, wo kara do. We have stuck to our ground and said, nothing doing, the banks will take their own decisions. And we are proud to stick to this decision. And it is a very big achievement that any government can have. And I think banks have got so much of freedom now to take really commercially sound decisions. Simultaneously, we have told the banks that that does not mean, not interfering does not mean that the customers are moving from pillar to post. So we have told them to have a robust grievance redressal mechanism, both for the customers as well as for the staff. Even for the appointment of staff or transfer of staffs, we are just not interfering. So they should have their own in-house policy of transfer and postings, and they should stick to that objective policy of transfer and posting. And they should give a chance to people to have grievance redressal in case if any staff or a customer has a grievance. So that system we are insisting on. Now what we need to do in future is that right now, of course, the PSBs have all the freedom, but they are telling us that they want to probably recruit some people in the normal chain of appointment at the middle level. Now we are trying to see how we can help them with this kind of a liberty also. Of course, they are already free to hire anybody on a contractual basis. But if they want to recruit people in the regular scale, in the middle level, that is something which we are working out. And in the future, we would like to also give them that kind of an empowerment. Coming to the framework of accountability, what we have done is, earlier there was a system of statement of intent, which was made by every bank. It was given to the government. There was a negotiation between the government and the bank. And ultimately, the whole thing took about 6 to 12 months to approve. And it used to be approved only toward the end of the year, when the year was almost over. So it had not much meaning. So what we have done is we have now formulated, after consultation with banks and IBA, a new set of key performance indicators, which will not be necessary for in which case it will not be necessary for us to have it bank-wise. These are general KPIs in which we will be rewarding the incremental improvement done in that particular criteria vis-a-vis the previous year. So, for example, this entire KPI will be divided into 4 sections. First of all, there will be 80-20, 80 marks for quantitative performance and 20 marks for qualitative performance. In the 80 marks, there are 4 sections. 25 marks each will be given for efficiency of capital use as well as for growth and diversification of business, 25 marks each. And some of the sub-criteria of efficiency of capital use would be return on assets, return on equity, net interest margin, cost as percentage of total income, etc. And similarly, in growth processes, the criteria 25% will consist of fee-based income as percentage of total income, increase in retail credit, increase in number of transactions through alternate channels such as mobile banking, and then improvement in share of the saving banks deposits. All these are in the growth category. Then in the NPA management, we are having 15 marks, which will be given based on the improvement in the impaired assets percentage and based on the cash recovery out of the gross NPA. In the financial inclusion, 15 marks would be given, and which will be given based on their performance in various social sector schemes and the PMJDY that we have announced. So total of 80 marks for quantitative performance and total of 20 marks for the qualitative performance, which will include improvement in external credit rating, strategic initiative taken to improve the asset quality, efforts made to conserve the capital, and the HR initiative taken in terms of skill development and talent management. Now, those are the 20 marks which will be given by a committee. It will be a subjective assessment. It will be given by a committee headed by Secretary DFS. So this is a performance card, just a one-page performance card KPI, which we are giving to you in your press kit. So you would be able to see what will be the key performance indicators for banks. Coming to the next, governance reforms. What we have already done is that we have started the very innovative process of having an open dialogue with all the banks through the Gyan Sangam process, which was done in January. The next Gyan Sangam is also going to be held on 14 to 16 January in 2016. The dates are already decided, and we are going to have it in a very, very innovative way. So the banks are already preparing for it. Then we are also constantly engaging with the banks through review meetings. Honorable FM himself takes the quarterly review meeting with banks. We also had separate strategy presentation in which MOS and myself, both of us sat through the strategy presentation of 22 banks in various headquarters. We went to Bombay and South also we went to various places. Then we have also been removing the barriers of common service for all the banks. The banks have been brought together to have commonality of interest and to find out how they can benefit from each other by sort of sharing of resources and by sharing of best practices, etc. So that is also one of the good governance practice we have started. And then finally, of course, we have empowered the banks, boards of the banks. All decisions, all major decisions are taken by the boards of the banks, and that is the one. Now, among the things to come is that the key performance indicators which are there, we would like to link it to some kind of an incentive. Earlier also there was this element of performance-linked bonus. That performance-linked bonus was given to MD only up to rupees 8 lakh per annum. This time we want to, after we have announced our KPI, new KPI framework, we would like to make it more generous, the performance-linked incentive for the bank management. And also, if possible, we would like to link it to the employee stock option, ESOP option also we are considering for the top management of public sector banks. And finally, of course, the governance reform, the major thing will come when we actually have a bank holding company, which will be the next step. Right now, Honorable FM had said that we are starting with Bank Board Bureau. We will get used to this, entity which is working as a link between the government and the bank. So the government is not directly dealing with the banks. There is an entity in between which is there. But after that, we would like to go in for a bank holding company in which the entire stake of government holding in public sector bank could be transferred to that new entity, and that new entity can then raise some money from the market and give capital, more capital to the banks as and when required. And that bank holding company can also probably supervise some of the functions which is right now being supervised by the government. So those are the things that we plan to do in future. I thought I've covered almost all the subjects. So it is a 7-point agenda for us. After a lot of wait, of course, appointments have been announced and a lot of other things which were awaited. We are very happy to announce them today. Thank you very much. I think Honorable FM would like to take some questions.
Yeah. Thank you, sir. You will be
Part
getting
of your kit. So
That you will get.
all the banks which are getting in the first and the second tranche is already a part of your kit.
Part of that.
So we'll now take a few questions. Yeah. Let's start with 181. Rupa.
So congratulations on the very comprehensive plan that you've put out. I have two questions. First, to begin with, you've said that this 20,000 crores will be released very soon. How soon can we expect that? That is my first question. The second question is on your last slide, you've said that you will also announce strategic initiatives such as consolidation. How soon can we hear, and what are the kind of banks where you're looking at consolidation?
Can reply to consolidation.
Yeah, why don't you answer?
First question is that as soon as means within a month, we'll be giving it to them.
Yeah, on the consolidation question, as I said in my opening remarks, the idea is that this is a comprehensive framework for bottoms-up transformation. So the banks themselves have to decide what are their strategies, and if their strategies include consolidation, then they should prepare those plans, they should discuss them with their boards, and then they should bring it to their shareholders.
Yeah, Shishir.
Sir, when you are saying that that holding company will also take over some supervisory function, will this clash with the RBI supervisory power into that, sir?
These are the functions of the government, not RBI's function. Functions of the government, because as we are the owner of the public sector bank, so there are certain functions we are discharging as government, as the owner. But then we will transfer our ownership to a new
The
company,
government
which
will
will
own the shares of this company, and this company in turn will hold the shares of the banks.
So the government will only hold the shares of that company.
Yeah, Srivats.
So, is there a timeline that you're looking at as to when this bank holding company will take off?
Not really to bind yourself immediately. We'll have to see how the sector is now proceeding, and there are a lot of reforms which will have to take place before that.
Yeah,
But it won't be very long.
Yeah, in addition to that, of course, the first step is to put the bank bureau in place. We've already announced a very specific timeline for that, which is the bank bureau will be operational from April 1, 2016. We have to see how the bank bureau performs, and the bank bureau will be performing some of the functions that any owner does perform, not the regulator's responsibilities, but the owner's responsibility, which is to think through appointments and succession planning, to look at issues of strategy and capital, and depending on how all of that evolves and unfolds, then we will consider what the appropriate timing for the bank investment company will be.
Yeah, 95. Yeah.
Sir, this year you have allocated 5,000 crore out of 25,000 crore based. 5,000 is tied to performance. Over the coming years, can we expect that number as a percentage increasing, the amount tied to performance of PSBs?
Yeah, again, you're speculating about the future. We have a very clear plan for this year, the 25,000 crores across the 3 tranches. We have to see how all of that works, and then depending on what might be required for the following year, we can decide how the tranches might work in year 2.
I may supplement, this 5,000 crore is not the only performance grant. The tranche 2 is also performance grant given to big banks which are well performing. So that is also a performance grant in a way.
Yeah, Maua. Speak into the mic, please. Yeah.
So the bank board bureau and the holding company, how will they, how will the how will they work? How are they going to be different from each other? Won't it clash with each other?
You see, the bureau is the interim arrangement till the holding company comes into existence, because some of these functions will then get subsumed.
Yeah.
Sir, Sapna here.
Sapna.
Yes, thank you. So 2-3 questions, in fact, clubbed together. Sir, the holding company thing that has been announced today, this has been under works for some time now. So can we expect this, some kind of a shape into this in, say, FY17? Will it also need a lot of amendments in other acts, like, the Banking Act and so on and so forth? Second, sir, in terms of consolidation, do we have any kind of a framework so far, or again, that is something we can expect sometime later in the next financial year? And third, sir, when you're talking of all these things, are the public sector banks completely on board in terms of, talent coming in from outside? Adhia sir has indicated that even at the middle level, the government is open to, kind of bringing in talent. So, these 3 questions. And also, fourth one, sir, divestment. You were saying capitalization plan may be linked to divestment of government stake also in PSBs. But it seems in the current financial year, there's nothing on the cards as far as that is concerned, right? Because we have this huge capital infusion coming in from the government.
So obviously you've asked a whole host of questions. Let me take them sequentially. Your first question was regarding the holding company and what is required to get that in place from a legislative perspective. Obviously, we will have to consider exactly how this is going to work with respect to the Bank Nationalization Act. And so all of that will be worked out once the bank bureau is in place and we start to think about what the legislative requirements are going to be. So on that, we are studying the matter, and as and when we develop some details, we'll get back to you. With respect to the consolidation and the timelines and so on, again, as I said, it's a bottoms-up process. The banks have to decide what's in their best interest and how that process might unfold. So let us see what happens there. Now, obviously, with respect to the talent question where you said, how do the PSBs react to people coming in at mid-levels? That is something, again, that the public sector banks are going to have to think about. We have given them the flexibility to start to work through all of that and to see how people might come in at these levels. But this is obviously an ongoing process as well. Of course, through this entire effort that we've been undergoing for the last 7 or 8 months to put this comprehensive framework together, we've had intense consultations with the public sector banks, starting with the pre-work for the Gyan Sangam and then thereafter. So they have on their end been thinking about how they will affect these changes as well. Yeah. And then finally, your question was about divestment in shares. Again, this is something that the banks are working through. They have to decide when is it the right time for them to go into the market and with which kinds of instruments. So again, that question is best answered by the individual banks themselves. Our job as the principal shareholders and the owners of these banks is to ensure that they are adequately capitalized as they are right now, that they have the framework in place to enable them to be competitively very well positioned, to enable them to deal with the systemic issues associated with NPAs. And once we establish that foundation, then they can go to the market very successfully.
Yeah, Manoj. No.
Sir, in the recent past, government has favored reconsolidation of the banks into 6-7 major big banks. So do you have any roadmap to sell majority stake in any of the state-run banks this year? Thank you.
That's not an issue under consideration at the moment. Because even when the last question of divestment which was mentioned, any divestment which has to take place while retaining the 52% government stake, a post-capitalization divestment is always a preferred option.
Yeah, 115.
Sir, in one of the slides, it said that banks will be given greater flexibility in hiring manpower, something that you were also answering just now. So does it mean that banks will also be allowed to go in for campus hiring, something that the banks had asked for in Gyan Sangam itself? Because we haven't really heard on that front.
You see, there are legal difficulties in that. The banks are extremely keen to do that. And the banks being state instrumentalities because of majority holding by government, there is now a judgment of the Supreme Court which is not giving adequate flexibility to the public sector banks how to do it. And that is a handicap which the banks have flagged. We are examining that legal position, but as of today, there is a legal impediment in that.
Yeah, please, sir.
Sir, Gaurang Sinha from Bloomberg TV India. Sir, the first one was with regard to banks' capital requirements. Now, with regard to after this capital infusion by the government, is that in itself sufficient to meet the bank's capitalization needs, or is there a target which has also been set in terms of banks raising capital from the markets? Secondly, sir,
No, 1 minute.
Well, we've announced a roadmap for both of them, because in the decision which had been announced, in addition to the 70,000 crores, over the next 3-4 years, another 1,10,000 crores in terms of raising capital from the market had also been announced.
Yeah, 142.
Private sector players as heads of state-owned banks, and along with other measures, do you expect significant improvement in NPA situation?
Well, this is a part of
and other things?
This is a part of our attempt to professionalize the management of the banks and to make sure that the best talent is made available from wherever it is available. Now, this question of NPAs will require several steps. Professionalizing management is one, recapitalization is another, dealing with the sectors responsible for the NPAs and distress is the third. So the government is working simultaneously on all of them.
Sir,
1 minute. Lakshman.
सर इंफ्रास्ट्रक्चर खासतौर कई सारे प्रोजेक्ट ऐसे हैं जो कॉस्ट ओवररन की वजह से या फिर किसी दूसरे वजह से शुरू नहीं हो पा रहे हैं, उनको और बैंकों से पैसे की ज़रूरत है, लेकिन पहले उन्होंने इतने पैसे ले रखे हैं कि बैंक अब उनको कर्ज देने के लिए तैयार नहीं है. क्या ऐसे प्रोजेक्ट को लेकर के रिजर्व बैंक से किसी तरह की सरकार गुजारिश करे कि
ऐसे प्रोजेक्ट्स के संबंध में आपको याद होगा जो विशेष रूप से हाईवे सेक्टर्स वगैरह में थे, तो वहाँ प्रमोटर्स के एग्जिट की गुंजाइश भी बना दी गई है और उनके स्थान पर कोई दूसरा आ जाए.
Siddharth.
Sir, will you open the MD post in other banks, including SBI, to the private sector? And two, I have a question.
There is no vacancy there.
As and when the vacancy arises. And two, I have a question on GST to the FM. How do you, would you like to respond to the three conditions that Mr. Chidambaram has placed with you?
Well, I don't think it is any part of prudent politics for any party to put preconditions, particularly on a matter which involves a fiscal relationship between the center and the states. Now, the first conditionality is that there must be a constitutional cap of 18%. Now, neither Mr. Chidambaram's proposal, as approved by him after the standing committee in 2013, nor the then finance minister's proposal when he introduced the bill in 2011 had any such 18% cap. So that's clearly an afterthought. In any case, fiscal limits need flexibility depending on the economic situation. And every time you have to alter taxes given a given situation, you don't have to amend the constitution for that. Nowhere in the world does it happen. As far as the dispute redressal authority is concerned, the standing committee unanimously recommended that we must not have a dispute redressal mechanism, authority. All Congress party members were privy to that report. Mr. Chidambaram accepted that report in 2013. And then accepted the formula that disputes would be resolved in the GST Council, which is 1/3 center voting powers, 2/3 states, with a 3/4 majority required for any decision. So both these two conditions are contrary to what his own stand as finance minister were. The third condition of 1%, up to 1%, it's not 1%, up to 1% additional tax, was a compromise between the center and the states. And all these three decisions are unanimous decisions of all the states, to which even the Congress party states are privy. So it's clear that these preconditions are an afterthought.
Yeah, Ravinder, you wanted to ask.
Yeah.
Sure.
जेटली जी दो छोटे छोटे सवाल है इधर से. एक है ऊपर से, चाइना एक तरफ समुद्र की तरफ से भारत को घेर रहा है और आपने देखा कि पाकिस्तान की तरफ से हाईवे बना रहा है. तो
विषय नहीं है.
तो उससे एक तरफ नहीं, इसी सवाल है इंडियन इकोनॉमी पर और इंडियन बैंक पर ही है. सवाल यह है कि चाइना अपने मुद्रा का जो डिवैल्यूएशन किया उसे इंडियन रुपीज का तीसरे दिन लगातार मूल्य गिरते गया. ये जो भारत सरकार के पास क्या इंद्रधनुषी कोई प्लान है उसको कट करने के लिए? दूसरा,
चीफ इकोनॉमिक एडवाइजर,
आप सर जवाब दे देते तो चल जाता टीवी पर.
My Hindi comprehension is, is going to be conveniently bad now. Anyway, so I think the question is that, what is happening in China with respect to the currency has induced some amount of volatility in international foreign exchange markets, and we are feeling some, repercussions from that. But more broadly, I think that because our macroeconomic situation is very stable in a number of ways, we have adequate reserves. The prospects of the economy, both in an absolute and relative sense, are very bright. Therefore, this should be seen as a temporary situation, temporary adjustment, because the fundamentals of the economy are very sound.
Yeah, please ask your question.
Excellency, I am from TASS, news agency of Russia, and I would like to ask you about recently established BRICS Bank. When India is going to prepare the questions for the consideration of a new development bank of BRICS, and when India is expected to get the support for first of its project? Many thanks.
He wants to know about the BRICS Bank. When is it going to become operational? And when are the first projects going to be?
No, I don't know. The BRICS Bank is now already operating, and therefore the bank is operational. It already has an office, it has a staff, it has a president who's taken over almost 2 months ago. So the bank is operational. Now it's for the functioning of the bank to decide which are the projects it's going to support, and I hope that decision will come very soon.
We'll take last two questions.
Sir, Dipankar from PTI. As Minister said that as far as consolidation is concerned, it should come from the bank itself. So in that regard, I just wanted to understand, any proposal has come to the government as far as merger is concerned, and there were reports that there is a plan of merger of Bank of Bharatiya Mahila Bank with SBI. What is the status on that?
Well, there is no decision on that proposal at the moment.
And sir, with regard to inflation, would you like to, it has touched historic low, so would you like to comment on that?
Well, that's a very positive sign as far as we are concerned. And obviously, just as it was indicated, along with the other important data which has come out, this speaks of the stability of the economy that we are in. the inflation is under control. The manufacturing figures, IIP figures are quite encouraging. The indirect tax revenue figures are extremely encouraging. Even if you take out the additional revenue measures, which the Chief Economic Advisor explained 2 days ago, you still have a significant growth. Both the timetable and the geographical spread of the monsoon is quite good. And therefore, across the board in various sectors, we expect a significant improvement this year. And of course, this will also have an impact later in the year on the rural purchasing power.
So do you
the
see...
Economic Advisor wants to add something.
I just one point to add to what the Honorable Finance Minister said. I think the latest inflation numbers, like CPI, WPI, along with other data like, for example, the growth in deposits into the banking system, the moderation in gold imports, tend to point towards not just a decline in inflation or a large decline in inflation, but perhaps also a big structural shift in the underlying process of inflation. And that's something that's, I think, very encouraging.
Yeah, we will
So
take
if I
one
could just
question
ask,
from the Deepika, and this is last
Just
one.
follow up to that. CA said inflation's really coming down. Do you see a strong case for a rate cut now? Is there a justification not doing it?
I'm sure we all know the relationship.
Yeah. Please ask your question.
Please.
The fact that you indicated on the bank holding company, can one infer that the government has concluded that in the future all public sector banks should be run as corporate entities? And secondly, from the point of governance, are you looking to change certain policy aspects so that governance could be better at the level of the banks? For example, we find that none of the government nominees ever attend annual general meetings of banks. So
Well,
given that you are looking at the market for capital, should you not focus attention on these aspects?
No, we obviously would like the banks to be professionally managed and demonstrate world-class corporate governance. And that, of course, requires that we have outstanding non-official directors that certainly attend all the important meetings, including the AGMs. With respect to your earlier question about whether the banks are corporate entities or not, they are already operating as corporate entities. We also have to consider how to establish them as holding companies, because today they have a number of subsidiaries, whether it's insurance companies or asset management companies, also that they own. So there is also a question for individual banks whether they, from a structuring point of view, should be holding companies as well. So that is a separate conversation, not just about the bank holding companies, but for individual banks, what their best structure would be.
There's no conflict between banks running professionally and banks also performing the social responsibility, particularly the PSBs.
Yeah, Rahul.
Chief, since you took a question on GST, I'm
Speak
encouraged.
into the mic.
I'm encouraged by the fact that you took a question on GST. There were some anxious moments at Jantar Mantar today regarding OROP. Is the government close to deciding some kind of at least a roadmap?
Well, the government is completely committed to the one rank, one pension principle. It's only the arithmetical translation of that principle, because several interpretations are being given, that is being worked out. And therefore, with regard to the principle being accepted and implemented, I don't think there is any issue at all.
This is really the last question.
Sir, this is TCA Sharad Raghavan from The Hindu. The RBI governor so far has been saying that banks have so far not been passing through the interest rate cuts. So as the majority stakeholder in these banks, are you speaking to them about this? Is there any plan forward?
Actually, the transmission of interest rate is always, there is a time lag between the reduction of rate. And secondly, you know, why the reason why banks are not able to pass it down is that the repo rate is only the money that banks borrow at repo rate of RBI is very minimal. Their main cost of deposit, their main cost of fund is through cost of deposit. So unless they are able to bring down their cost of deposit, which may have an adverse effect on their total savings collected from the people, they would not be able to have that kind of a liberty of passing down that rate of interest cut to the people. So that's the main reason why it is not happening. Their rates of deposits are benchmarked with some other rates, small savings rates and other rates. And that's why. So the banks don't have the luxury of passing down all that rate cut exactly in the same proportion.
Thank you, Minister, sir. Thank you, friends, for making it convenient to come.